All right, we're rolling. Hey guys, this is Hala Pablo. Hope everyone had a safe and happy new year. Let's get right into it like I love to do. Let's talk about crypto. Let's talk about Bitcoin in general. Here I have a Bitcoin on the 2-day. Let me show you what I'm seeing. I shared this with my group this morning, and I wanted to just kind of wet your whistle out there in YouTube land and show you kind of like what I'm sharing with my group. Fractal format. You know that everything is fractal in the markets, meaning everything is made up of the DNA of basically Elliott wave, which is a five wave going up, and then ABC going down. And it doesn't matter on the time frame. You could blow it up to a monthly, or you could take it all the way down to the 1 minute. You're going to see Elliott waves. You're going to see price action comprised of Elliott waves. Now you put all these Elliott waves together and you get certain geometric structures. You get patterns that you see reoccurring over and over and over again to a certain degree, not always cookie cutter, but oftentimes very similar to an astonishingly predictable degree. You could see these patterns repeating over and over and over again throughout the years. And so that said, if you look at this chart here that I've drawn out, you could see 1, 2, 3, and then the makes of 4 basically trading cycles. The tops we would call them the buying climaxes, and the bottoms we call the selling climaxes in Wyckoff terms. Now all these are made up of Elliott waves. You could see the Elliott wave. If you don't know what Elliott wave is, it's, you could see the 1 here, the 2 here, the 3, 4, and then 5 would be the top, and then you would have your A, B, and C going down. But I don't really want to talk about Elliott waves right now, although you can break everything down into Elliott waves and have fun doing it. I want to take the two tops of these cycles. I believe that a cycle is made up of a selling climax, a buying climax, a bottom, and then another top. But this top doesn't exceed or dominate the previous high. And all this is within a 4 cycle. Think of like a dollar divided into quarters. You have 4 quarters in a dollar. Here you have a top, that's 1. Here you have a bottom, that's 2. Here you have another top, but the top doesn't exceed the previous one, that's 3. So that's 75 cents. And then the E would be the 4th quarter of the dollar. And then from E we go and we break structure. We have a retest along the macro resistance line, and then we go off and we form the beginning of a new dollar system, if you would. So maybe I should come up with my own dollar system. I don't know, with trading. But this is very predictable, and it's standardized. You see it over and over and over again. I encourage you to check out different coins, whatever coins you like to do. Blow it out to the daily at least, and start looking at the histories of the cycles of years past, and you'll see one macro buying climax preceded by a bottom, and then another top, but not preceding the one before it, and then a bottom, usually a spring. It doesn't always have to come all the way down to C, but it does come back down to remitigate the lows, to revisit the lows. And we find that from C to D in these ranges are within the same structure, which comprises of like one gigantic descending triangle. And it's interesting to see, if you draw the trading range support and resistance lines from the very, very tops of the selling climax, or rather of the buying climax. Let me get a little brush here so I can show you what I'm talking about. So we'd say like, okay, so this was back in like March of 2018. We had that buying climax, and then it comes back down to this and makes a bottom, and that's C, and then D comes up to the counter trend top, and then E is that final support where it hits support, retests the bottom. Sometimes it doesn't go all the way back down, and then it bounces from here and it goes up and it forms another system. We just talked about that. But if you calculate between the buying climax here and the first bottom before it creates a double bottom, you see how it mitigates, C mitigates E. In between there, and you calculate the distance, you have what's called the 0.5 Fibonacci line. And the 0.5 Fibonacci line I call TRM, trading range midpoint. And trading range midpoint is often the area where you find the counter trend tops, where trading range midpoint almost touches macro trend resistance, which is the tops of these of these. This is the first buying the buying climax and the counter trend top. If you draw a straight line or it's a diagonal line, you're going to get the macro trend resistance. We find it up here as well. The macro trend resistance you see in the present range where we have the bottom. Now I drew this one. Let's talk about where we are right now. I drew the top from the buying climax of our range, the range we had back in October of 2021. And then the bottom, the absolute bottom that we had last year in October, or rather November, where it went to 16,000, 17,000 Bitcoin. Remember that. And where we presently are, we've come up, according to the 0.5 Fibonacci, between the bottom and the top calculations, we are right at where we should be for this bounce within the descending macro triangle that we're presently in. So that would put us at where we need to be, a counter trend top or approaching a counter trend top with the mitigation point similarly to where it was back in 2017, this area here. Below the B point, but certainly above the 0.5 fib line, something around here, that would put us at 48,000. And from there we would have the bounce, and we would come back down to retest the lows, which would be the E point. Now notice the E in this first range didn't come all the way back down to C, but it came pretty close. It came more than halfway back down. That would put us somewhere around $25,000 Bitcoin. Now we could go even deeper, depending upon the recession or what's going to go on this year. But we may even go deeper, but that's not really likely. I think we're going to bounce. We're going to come back up, and this will be just right in time for re-elections and the boost in the economy, which I anticipate us seeing. Magically, the economy is going to improve right before election, and so now the C and E of the counter trend. Now notice in the last cycle, we went up 350% from the bottom, from C back in November of 18 to D, which was the top in July of 19. That's 495 days, 350%. We went up. We're not even close to 350%. We went up about 200% since November of 22. So, and it hasn't been 495 days. We could look and see how many days it's been. Let's see, where's my, we'll just do a date range here from the bottom to where we are presently. And yeah, it's been about 430 days since we've bottomed out in our C. So, and then if we go down and look at the VSA, at the volume, we see the supply spike, the C supply spike here, with, even though we're going up on this Elliott wave within the triangle, we see descending volume in demand. I'm going to blow this up so you can see it a little higher. See how like demand has gone down. Now we had a little demand surge right here, but overall demand has decreased, and which is indicative of a top that's approaching, that we're going to go back down. So this is the market makers selling or decreasing demand and selling supplies, knowing that they're going to dump supply at the D point once they hit the macro trend resistance line. And then so that was that last cycle. And then here again we see the big supply spike at C and decreasing demand as this Elliott waves climbs up to the macro trend resistance to where the D point is, which would act as the counter trend, right where it needs to be at the 0.5 fib line, mitigating this area here at the top of the triangle between B and C. So anyway, I said all that. just to show you some of the things I'm looking at. I'm expecting a large volume spike somewhere between here and the where it tops off at D. You see this top supply where it registered in volume here, supply volume, and then a steep sell-off taking us back down to E for that final bounce mitigation point, and then volume coming in, big volume at this point. And then at E, we're going to see the very, very large demand volume spike, which is going to signal the bull reversals. Okay, and that's what this spike here does. See how this demand spike just towered over all the preceding supply spikes before it. So we haven't had that yet. And I don't expect to see it at D. I expect to see a big supply spike, and we're coming back down so the market makers can generate liquidity all the way up here at 48,000 so that they could bring it back down and repurchase Bitcoin at point E deeply. And then we're going to see the big demand spikes coming in with a vengeance, and that's when we're going to come break structure, retest like it did here, and then go up to bigger and better things, triple digit Bitcoin. So that's what I'm seeing. I hope you guys found this informative. I'm going to let you go from here. And if you find this information profitable to you, I'd appreciate it. I'll keep churning these out. Like, subscription. If you want to learn VSA and Wyckoff, you want to stay safe in the markets, I encourage you to check out our Discord trading group. I keep it extremely affordable. It's $20 a month, and I teach you in essence how to fish. I don't spoon feed you signals. I share what I'm doing, and you're welcome to piggyback and do what I do. But there's even a better thing, and that is learning how to do this yourself. It's not rocket science. You shouldn't be paying thousands and thousands of dollars for to take a course in Wyckoff. When you could learn how to do it, it's not as difficult as it seems. It's just pattern recognition and just learning to read the volume in conjunction with price action, and it's logical. Everything is based off of logic. So I teach you how to do that. I can show you how to do it, and at a very affordable price. So you could also chat, and it's just fun. We have a really good group there, and there's also some really, really good traders as well in that group, and we bounce ideas off each other. So if you're looking to get serious in your crypto trading, I would encourage you to check out our Discord trading group. And so with that, I'm going to sign off, and I will talk to you guys soon. We got some more coins coming up on the docket. Bitcoin, again, Ethereum, XRP, Shiba Inu, Solana. I'm going to be looking at all of these. So be sure to subscribe so you don't miss those updates. All right, guys, I'm going to go. Have a great day. Bye-bye. Adios.